Good morning, everybody. How's everybody doing today? Good Friday morning. It's 9 a.m. How's the weather been where you guys are at? It's been just nothing but rain all week. For July, that is very, very strange, but it's just been nothing but rain over here, which is good working weather. I love to work during the rain, but man, it's been nuts. Alright, so we got another Friday wrap-up session here. I want to start the session off by taking a look at the overall positions being held by traders. This gives us a good sentiment of what retail traders are doing. And then we'll take a look at the markets and see what the banks are doing with their positions, okay? Because obviously that is the more important thing. So we see that there's basically an overall consensus with Euro. They're mixed. All right, everybody's, mostly with these positions here, we're seeing mixed results. People don't know what to be, short, long, and for good reason, because we've been talking about how the institutions were taking profits on positions, and with them taking profits, it's caused the price to reverse from the original direction that price was heading in. But remember, price builds momentum, it moves in one direction, but then when they take profits, it reverses. But that reversal is not fueled by momentum from accumulating a position. It's fueled by profit taking. So price will move in very unpredictable ways, okay? So that is what's causing this confusion here. So Euro, Pound, US dollar, Japanese yen, they're pretty much all mixed. Okay? They don't know what they're doing. And again, like I said, for good reason. So let's see, Aussie, they're a little bit more long than they are short. Kiwi, they're mixed. Swiss, they're mixed. Gold, they're a little bit more long than they are short. And oil, they're a little bit more short than they are long. All right, so that gives us a good indication of what's going on with the retail traders. I'm not surprised, to be honest with you, because of what we were talking about. Okay, so let's have a look here at the markets. We'll do a quick overview of what has been taking place. I think the key chart here in terms of gold is this one here. Okay, so if you focus your attention on what has been transpiring here, you'll see that price has just been ranging, okay, all this time, ever since June, okay, of last year. We've entered into ranging, and that's all price has been doing. So really, we should not be engaging in this chart until the range breaks either one way or the other way, okay? Now there is a chart signal that we're waiting for, a very specific chart signal that will be presented on this chart if they are indeed going to take price to the upside, and we will be waiting for that. But that's essentially what's taking place here, okay? They were accumulating longs, and then all of a sudden, gold dropped down like this. Now you can see this was a major area of demand. They came in and tested it once. Now typically, if the banks retrace price into demand, what we'd like to see is them starting to accumulate a position to push it to the upside. Well, that didn't happen. It started to go up, and then it came down even lower. All right? So now at this point, all right, they didn't do it the first time, but maybe the second time they'll start accumulating a position and take it to the upside. And another failed attempt. So this is not good in terms of, wanting to see the strength in gold that we would be wanting to see. But that's okay. They could be taking their time. There could be a lot of things taking place right now. But essentially, we want to see if this range is going to break to the upside or to the downside. Okay. With the dollar, it's the same thing. Okay. the dollar also is in a situation where, we look at this weekly chart, okay? We had price at these highs, it dropped, and now look. Same thing. And this is why retail traders don't know what to do right now, okay? Because there are a lot of retail traders that like to trade ranges, okay? And with good reason, because they don't know why this range is being created. They don't know if this range is ranging because of profit taking or an accumulation of a position, or because price is reacting from a higher time frame area of supply or demand. They don't know that. And so you're basically guessing and rolling the dice, hoping that your position is going to work out. But it will work out until it doesn't. Okay, eventually you'll come up here and you'll short. Okay, you'll start getting into short positions, and instead of it dropping, it'll continue higher. But you know what? There's many times where price goes a little bit higher than the range, and then it turns over and drops. So a lot of traders have seen that before, and they think, oh, there's been times where it goes a little bit higher than the range and then it drops. So let me just add a little bit more short. Now, up here. And then it goes up a little bit higher. Let me just add a little bit more short up here, because it surely has to turn over. It surely has to turn over, and then I will start to profit from those short positions. And then it goes like this. And eventually it'll continue going higher, and depending on how frantic the trader becomes, they could be getting into such a large position that eventually it breaks the bank. So we don't do things like that. We know that ranging is not a good time to be trading the charts. Okay? There are times where the evidence suggests that a certain move is going to take place. Let's say that the evidence was suggesting over the longer period of time that price was going to head lower. Then there would be times, excuse me, there would be times where we would engage in a trade to the downside within the range as price was contacting supply. Okay? There would be times for that. So that's how we would trade price in a range. We wouldn't buy at the low to rally up and then sell at the high for the drop. We wouldn't do something like that. That wouldn't be a good idea. Because again, you're just playing with fire at that point. Okay? Because at any point it can do something different. You go long here, it can easily go lower. Okay? If the consensus was that price was going to drop, then we wouldn't want to be buying. That's the bottom line. That wouldn't be a good idea. All right? So basically the bottom line is, when I look at this chart, it's in a range. And to know what direction it's going to go, you have to wait until it breaks out of this range. Okay? We have a bias, obviously. We have a bias. We've talked about this numerous times. But we will wait, because even with that bias, we're seeing different signals on different charts. All right. So what took place this week was just this little movement up here. Okay. So beginning of June, we saw the big rally, and then we saw price stop. You remember that? We saw price stop, and it was just like in the middle of heading north, and then all of a sudden it just died. So we pointed out the fact that typically the markets don't move like that, where it moves halfway towards a target and then stops and then reverses. They typically don't do that. They'll only do that in certain circumstances, which we discuss in class. But under this circumstances, we wouldn't expect that. Okay? And that's why we expected the continuation of the move to the upside. until supply was contacted. So all this week was the completion of that move. All right? That's all it was. You see, when you study the markets long enough, you'll come to see that there are cycles. Okay? There's these cycles that happen. And it's like every week has a very specific purpose. Okay? So we could have, a demand zone on the chart. Okay? This is demand. And let's say price is right here. Okay? And what you'll notice, let me do brown for price moving. What you'll notice is that 1 week price will go down here. And during that week, it'll create a supply zone. Okay? The following week, price will consolidate. Okay? And our jobs as professional traders is to determine what the banks are doing each and every week. It's essential to understand what the banks are doing, because then you know where along the storyline price is. Because I always look at the charts like a movie. Okay? There's a beginning, there's a middle, and there's an end. It's telling you a story, right? It's a journey. It's like there's been so many movies about road trips, right? It's like a movie where they're on a road trip. They have a starting point, and then there's the journey, and then the destination. And for us to trade alongside the banks, we have to tap into what that story is. If you can't tap into that story, then your chances of making money consistently drop incredibly. All right? So first, when price starts on its journey, what we want to determine is, first of all, where is the starting point? Okay? Where is the starting point? Because that really plays an important role in the overall journey of price. If you don't know where it's starting, then you don't know where it's going. And why I say that is, I usually use this example. Okay? Let's say you go over to a friend's house and you see them packing. And you ask them, hey, looks like you're on a trip. Are you going on a trip? Is that true? And they say, yeah. Now, you'd just be sitting back and you'd be looking at the luggage, the amount of luggage, the amount of clothes they're packing. And it would give you an indication as to whether or not they were taking a short trip. Because if it was a day trip, they wouldn't be packing clothes, right? You'd pack some snacks, some drinks. That's pretty much it. But if it was something that you were staying overnight, you'd probably bring a small bag with a change of clothes. If it was a longer trip, you'd have a big luggage bag with 5 pairs of pants, 7 shirts, and so forth. So judging by where the journey starts, you can already tell how big of a trip it's going to be. Okay? Looking at the charts is the same way. You look at the starting point, and from where it's starting, you can already start to determine where it's going. So here's price at the highs here, right? So to go along with the same metaphor, let's say we're seeing that they're packing up a luggage bag. And that luggage bag only means that they're going to be dropping price quite significantly. So based on that, our determination is that they're heading towards this area of demand over the longer period of time. So now our job is to determine what path are they going to take in order to get to that destination. So, but we also want to confirm that that destination is the one that's going to be reached. So how do we confirm that? Well, when you study price long enough and you follow how the banks move price from one location to another location, you'll start to realize that there are certain things that they do. Okay, they'll spend certain weeks consolidating price. They'll spend certain weeks moving price, and it's broken down to phases. So the way that we solidify what moves are going to take place in the markets is by watching what the banks do each and every week, because we're watching for the signs. Okay, we're watching for the signs of what the banks are doing. And so if we have the storyline in our mind and we have it all detailed, okay, this is what they're going to do. They pack a large luggage bag. It's very likely that they're going to drop price all the way to the opposing area of demand. And based on this time frame, we are expecting them to do this, this, and this. And so that's the forecasts that we put out. Every week we put out a report. We call it the Arujo report. And we detail what the positions are of the banks, what price was doing, and what we expect price to do based on all the evidence we are gathering. And if you look at the past reports and you look at the accuracy of our forecasts, you'll realize the reason why we are so accurate is because we are tapping into the story of what price is doing. Okay, we're tapping into that story. And so when we lay out our forecasts are laid out based on our expectations of the storyline playing out. And so we have a situation where price will come down, and then one week it will consolidate. And then the next week it will rally up to contact the area of supply. So obviously in this storyline, where we would be at is that the next expected move is a move down. Why? Well, because we know the journey, we know where it started, and we know where the destination is. And so if price dropped one week, consolidated the next week, rallied the next week into an area of supply, what's the logical next move on this journey? It's a drop. And so when we lay this out in our Arujo report, that's what we would put out. We would detail the storyline, detail what evidence we are seeing, detail the logical understanding that we take from what we collect from all the evidence, and then lay out what we expect moving forward. And so what will happen is you'll see price drops. Okay? But after it drops, it doesn't just continue to drop. It'll sit, and then it will pause for the next week. And then we'll have expectations based on the fact that price reversed and contacted this supply. There would be certain expectations of what we would expect from price. And the whole time we are always looking at different time frames to make sure that our expectations are fulfilled. Because if what we expect to happen does not happen, it immediately brings into question whether or not we are on the right track following the storyline. Because there are times where price will veer off the path and do something, head even higher and break through the supply. And then that brings into question, well, hold on for a second. If we had this all figured out, we knew the starting point, we knew the end point, we knew that it was going to rally into supply and then drop, and it did. And now all of a sudden it's taking out that supply. Why would it do that? And that's our job to determine that. Because sometimes this will happen. And there are always very logical explanations for it. This is one of the things that we do in class. If you've ever wondered what it is that we do in class, this is what we do in our class. We look at historical charts. We look at what the banks did previously. Because every piece of a chart is a story. And if you can examine that piece of the chart and discover that story, that is so powerful you have no idea. And the students know that, and they're seeing the results of it. So that's what we do in class, is we determine what the banks did during a certain portion of chart. And each class is broken down to many sessions where we look at the next piece of chart, determine what the story was, then the next piece of chart that attaches to it, determine what that story is, and eventually we get to see the full story play out. Okay. So there's always phases of the market. All right, there's always phases of the market. So getting back to where we left off. We're here in terms of the daily chart. We had that big rally. So what was the point during that whole rally? Well, the point was down at the lows, down here, if you will remember, we had NFP coming out. And a lot of traders like to trade NFP, right? They like to get in when the market makes those big moves. And what did we say? It was near the lows. And if it comes out, they're most likely going to use it in their favor. And what took place? NFP came out and it was negative. Okay? Even though the numbers were higher than the previous release, the so-called experts wanted it to be even higher. So the fact that it didn't reach their estimates, it became something that was looked upon as negative. So obviously you see how this game is being played. And so what happened is they lured a lot of traders into getting into short positions. And then what took place? The massive rally in price that we were expecting. Okay? We said it. We told you. We said, look, they're going to lure people into going short and then sit back and watch what happens with price. They were luring retail traders into going short as they themselves were creating demand. They were creating areas of buying. As the news was coming out, the data was coming out, that was negative. So that was a whole goal of theirs, was to lure in traders into getting in short. Then their next goal was to push price up. Then they consolidated. Then their next goal was to push price up until contacting supply. Okay? Each week there's a story. And following along in that story is what brings you consistent results in your trading. So now we have supply being contacted. What is the next logical move? Okay? When you follow the storyline, there's always going to be a logical explanation for what's taking place and a logical conclusion that you can come to. All right? The logical conclusion is price is going to drop. That's just the logical conclusion. Why? Because of what is taking place, what has taken place, okay? And what we believe will continue to take place. So another interesting thing that we can do, if you want to follow along this storyline like I was mentioning, is to look at what they are saying in the news. It's one of my new favorite things. So let's take a look at that. Dollar price. So we're at supply, right? We're following along the story of price and we're at a supply zone. Okay, so what do we want to know right now? We want to know if we want to know what the media is saying in regards to the dollar. So let's say past 24 hours. Past 24 hours, let's look at what they're saying with the news. Let's open that up like this. Here we go. Okay, dollar price, Bitcoin, lots of Bitcoin stuff, South African Rand. Let's see what else we got here. Come on. US dollar index price analysis, support seen around 92. Support seen around 92. Let's shrink that up a bit so we can get a good look here. Okay, support seen around 92. All right, that's kind of bullish. You ask me. Support seen around 92. Okay. We're contacting a massive area of supply on the weekly chart. This is an area of supply that the banks created. Okay. And below it, below current price, there's absolutely nothing to stop price from dropping. Nothing. You can say there's support there. You can say there's whatever you want there. Moving averages, whatever you want to call it. All right? That's not going to stop price. If the banks were going to take price higher right now, it would be because they would flush the market with buying. All right. It wouldn't make sense to the overall picture of what we're seeing with price. It would be something out of the norm, but they could do it. All right. That's not something that we'd be able to predict at this point, because logically it would not make sense based on everything they've been doing, right? You're thinking about the largest banks in the world. They're dealing with trillions of dollars. So they have such a large portfolio that they're dealing with that it takes a long time for them to maneuver. They can't just get in and out of positions like we can. It takes them multiple weeks, multiple months to build large positions. Can they get in and out of small positions quickly? Yes, they can do that. But they're not looking to get out in and out of small positions. They're looking to accumulate large positions. All right? So that takes a long time. So it's like you wouldn't see a big investor invest millions of dollars building a hotel, and they create the foundation and they hire all the planners and they're starting to build the structure, and then all of a sudden demolish it and walk away from it. It wouldn't make sense. Could they do it? Yes, they could. But is it something that we see all the time? The answer is no. Okay? So the same thing with how we're looking at price. Would the bank spend so much time creating something very specific on the chart and then all of a sudden just come in and demolish it and start doing something different? It's not likely. It's not likely. But can it happen? Yes, it can happen. Okay? Hit the like button for me if you haven't yet. Let's get it up to at least, we should be able to get it up to 50 likes. All right? Can we do that, guys? With your help, can we get 50 likes? So there's nothing to stop price from dropping by looking at the weekly chart. There just isn't. All right. So we have support seen around 92. Okay. I would disagree with that. Let's see what else we got. Let's put US dollar. See if we can get something a little bit more closer to what we're looking for. It's been up there weeks, so we can actually extend this to a week. Like that. For the results. Okay? And let's see. Nothing there. Longer. Let's see. Canadian dollar, US CAD, price analysis. Okay. US dollar price action setups. Okay. I'm still not seeing anything. Euro rallies after ECB speech. Okay. Let's quickly look at the euro. It didn't rally because of the ECB speech, okay? It rallied because it contacted demand on the weekly chart, just to let you know, okay? That's the reason why. But again, the media is always going to explain it in ways that your average person will say, oh, okay, that explains it. That has nothing to do with that, okay? Like I've always said, price is going to do what it's going to do based on the banks, all right? Again, the banks spend a long time accumulating positions. They have a plan. They know what they're going to do with price. And the only thing that a news event or a meeting or economic data is going to do is bring momentum in to what was already going to happen anyways. Okay? Gold prices rebound as the US dollar and yields fall. Let's go back there. As US dollar and yields fall, as the US dollar falls. Well, okay. We know why. Is there any other one? Let me see. Yeah, I don't really see anything else here. Bank of Canada will get more room to hike rates with U.S. Fed turning hawkish. Hawkish. There we go. U.S. dollar outlook, has the trend finally reversed? What are they saying? U.S. dollar may be on the verge of extending gains against the Singapore dollar. Let's see if there's any other ones. U.S. dollar, strong performance. Another one. U.S. dollar, strong performance. Very strong. A day ago. Maybe I should buy. Okay, so you've seen many examples so far. Well, a handful. And if we continue to look and look and look and look and look, we'd find a lot more. Okay, so we're at supply. We're seeing signs that the media is saying that there is support for where price is. We might see some move to the upside, which goes against what we're seeing with the story of price. Okay? If it's to go up, then that means the euro would go down, right? And right now, retail traders are lost. They don't know where to go. They were getting in long, then they got in short. It's just a mess, complete mess. So, again, when we look at price and we look at the storyline of price, it's pretty clear to us, all right, that we should be expecting a move to the downside. If something different happens, then that would be something out of the norm. Okay, it could happen, but it would be something out of the norm. Okay, when following along. And remember, U.S. dollar, Japanese yen. It's pretty much in line with that. Okay, we have major supply in play here. Okay, we have major supply in play here on the weekly chart. So both the U.S. dollar, Japanese yen have supply on the weekly chart and the monthly chart. And guess what's happening on the daily chart? Ascending structures are breaking. So remember I was telling you about the storyline of price, right? If there's a specific story that price is going to head from one area to the next area, we'd need to see evidence of that, right? If somebody was going on a road trip, you'd want to see the car leaving the driveway, getting on the road, and getting onto the highway in the direction of the destination. This is the same thing that we're doing when we're looking at the charts. We're looking at what's taking place to determine if that journey is indeed about to progress to the targets. A DXY index seems to be a good keyword. Okay, we'll do one more search then. Let's do that one. DXY index. You could search that. DXY index forecast. Thank you for that. Tools. Let's see. Last week. There you go. Seen around 92. Yeah. Let's just saying. Let's see if we just go all. Let's see what comes. Then we'd have to go into all of them. All right. Anyways, you get the picture. You get the point. USCAD. Let's look at the other ones. USCAD made a nice rally up, right? And now we are seeing weakness coming in, just as the US dollar is contacting that supply. US Swiss reversing. Okay, if it closed down below, gives us a bearish engulf. That's a good sign, right? So we're seeing some signs of that weakness already on the dollar pairs. Okay, we're seeing good signs of that weakness on the dollar pairs. Look at the 4-hour now of the Dixie. Okay, could continue lower for the rest of the day. Very likely, I would say. Very likely. Over time. You could get short-term moves to the upside, but over time, I think we should be seeing a move to the downside. All right, what do we got? 30 likes. We got 44 people right now or so watching. Can we get that up to 50? We should be able to do that, guys and gals, if you don't mind. Let's do that. Okay, so that is pretty much it, guys and gals. Right, that is what's going on. So we should be prepared for next week. We should be with the understanding of what will likely take place in the markets based on what is taking place now and what has been taking place. If something different happens, great. We'll analyze it and we'll examine where in the storyline is price. Why were our expectations different than what is taking place? Okay? But as long as price continues to play out in line with our expectations, then we'll continue to expect price to do what we are expecting price to do. Okay? So that's it, ladies and gents. We hope you have a good one. We had some nice winning trades earlier this week that I gave out in the Telegram channel. If you haven't joined us in the Telegram channel, you should. Just open up your Telegram and search Supply Demand Forex Trading and you will find us there. There's also links on our website, bottom right hand corner. There's links there. And I would encourage you to join. All right? So have yourself a good Friday. I'll be working on the latest set of data when it comes out at 3:30 and start working on the report and start figuring out what the storyline is and if the positions by the banks are complementing the storyline that we are anticipating to play out or if it's not. Okay? And I'll detail all this in the report for members. Okay, ladies and gents, it was nice. Thanks for joining me this morning, and enjoy the rest of your week and the rest of your weekend as well, I should say. All right? Take care. Thanks for joining. I appreciate it. We'll talk to you soon.